Hello YouTube, it's Josh here with Zero Gravity. I wanted to go over Rocket Companies with you today, aka Rocket Mortgage, ticker symbol RKT. It's definitely one of the hot topics right now on Reddit and a lot of other sources, and I kind of wanted to give you my thoughts and opinions on it. I am a loan originator myself for a different company, so I know a little bit of insights that not everybody knows about. So I just kind of wanted to tell you and go over a little bit of technical analysis with you and my thoughts and process since the IPO. Originally, Rocket IPO'd August 6th for $18. It immediately took a little drop off here, all the way down to the 18s, or I think the first day was 1750, but ended up staying right around the 1830 mark. It ended up rocketing right back up. I bought back in about $20.60. I rode it through this huge move here. I wish I'd have cut losses somewhere in here, ideally right there at the top, but I didn't. I held on to it. It continued to consolidate for a few months here. I started selling covered calls. My idea and thought process through this is, if you remember, March 2020, we had a huge drop in the market. With that, the Treasury stepped in and said they'll continue buying the 10-year bonds for the indefinite amount of time. I think they estimate about 3 years. So interest rates were at all-time lows. During this time, I was writing on average about 2 to 4 loans a day, staying extremely busy, had more calls than I could actually answer. Everybody and their mother was trying to refinance their homes and lock in these super low interest rates. So I expected Rocket to come out with some, amazing earnings reports. They are the largest online lender out there, and that's the whole reason I invested in this company. Now, we went through earnings, didn't even budge, right? So I ended up selling here in early January just because it was consolidating so bad, and all the covered calls were starting to lose their premium, so there wasn't much money to be made on my covered calls there. So I ended up selling, and I want to say I ended up selling pretty close to what I was in it for, maybe a minor loss. And then something crazy happened. They announced their special dividend, and of course it rocketed up. Typical luck, right? I think that happens to everybody. Now, this kind of shocked me for a couple reasons. I know why they announced the special dividend. They were trying to attract new long-term investors. Hopefully they'll stay with the dividend. That would definitely be a reason to think about buying back into this company, because like I said, they are the largest online lender, so I know they do a fair share of business. But like I was saying, whenever they first IPO'd, rates were extremely low. This is the TNX, for anybody not following, the 10-year treasury bond. And then they slowly kept moving up, and then I cut my losses, right around this peak here is when I cut my losses. I knew the rates were getting up there. The market was slowing down. Once we hit this point, I'm writing about maybe 3 to 4 loans a week. Still people trying to grasp the last little bits of those extremely low rates. And then they announced their special dividend. The stock skyrockets also while the 10-year treasury is hitting new highs. So right here, we're looking at, on average, interest rates between 3 and 3.5 versus 1.9, 2.5, right? It's a pretty significant swing. So people that refinanced a year ago can refinance again, get a lower rate, lower their payment. Everything's amazing. Here, people that refinanced 2 years ago make no net benefit in their refinancing. Now, I jumped on the boat partially because it was an IPO. As far as the company's perspectives and stuff go, whenever somebody calls me and tells me they're comparing me to Quicken Loans, I'm usually pretty excited about it. They're generally a little more expensive than everybody else, which is fine. Some companies can get away with charging more for a premium product. Now, generally I get calls, which I'm sure they get some calls from some of my customers as well, that their process is taking too long, whatever, they start shopping around. So I don't think that's something that can keep up if they continue on the road they're on. Forward projections for the company based on their last earnings report are all down. They're estimating a negative 24%. I'm actually thinking it's going to be much lower than that. Like I said, I was writing 2 to 4 loans a day, going to 2 to 4 loans a week, and that's just not me. That's market wide. Like I said, it's not a net benefit for a lot of people to refinance right now if they've purchased their home recently or anything like that. I've seen quite a few downgrades as well. Now, what you see a lot of the talk and hype on is the short interest. There's a 35% short interest currently on Rocket. So that means a lot of people are extremely short on it. And part of that is from this spike here. So when it was $40, people were buying shorts, selling, and they're trying to ride it all the way back down here. So it looks like it's actually hitting a pretty strong support. Drawings back on here. Looks like they're actually hitting a pretty strong support right here. And they may continue to hold there. So they're hitting a pretty strong support, I think, right around this $25 range. And if it can get enough, another problem with mortgage related companies is when this launched, this is not your typical IPO. Roblox, Airbnb, all those guys are going straight up. Everybody's excited to buy the company. Rocket is not as exciting. It's a mortgage related company. So generally, you'll see these forward PEs of about 6, 7 maybe, if it's a strong company. Let's look at an example here. Let me see. United Wholesale Mortgage. They're doing way less volume. Nobody's doing as much volume as Rocket is, of course, but they're at 6.5. So that's generally where I would expect these companies to be at. Rocket being the largest, maybe 10. So I'm thinking that's where I'm expecting it to end up settling at, somewhere around the 10, which is going to be way less because their forward projections are way less. So keep that in mind when you're trading this company. Now, like I said, one of their biggest things was Rocket Mortgage. It's supposed to be a completely online service that you can knock out a home refinance completely online. You don't have to deal with anybody, anything like that. Now, I don't know how many of you, my average audience is 25 to 45. I don't know how many of you have actually refinanced a home, but it can be very time consuming, annoying, all the document requests. If any documents cut off, if there's something can't be seen clearly, maybe they'll need additional documentation, stuff like that, which is hard to actually do with a completely online process. There has to always be somebody there to check the paperwork and everything else. So anyways, I jump onto the online thing here. I'm just wanting to, all I'm wanting to do is look at your rates, guys. Come on. You guys are supposed to be super competitive, super competitive. Let me go here. I apologize if y'all can hear my keyboard clicking. All right, now I gotta create a password. Heck yeah, I'm gonna make it password 1. All right, don't tell nobody, guys. That's my favorite password. Don't be copying it. Let me go. Come on. Let me look at rates. I'm trying to look at rates here, guys. Oh, what? I gotta verify my email address. What? Oh, what is this? Oh, I can't look at rates? All right, I'm gonna go somewhere else. Now, this is one of my biggest concerns with Rocket Mortgage, right? There's about a couple dozen companies out there that are doing this on a pretty big scale now. And there's a lot of competition in the market, and I think there's a lot of companies that are a little more advanced than Rocket Mortgage is. They're completely online process. If I can't even look at rates or anything without having to do a bunch of double checks and back checks, I'm probably not going to start with your company. Now, their biggest benefit is the amount of customers they currently already have in their client, because they also are a servicer. So they take a lot of loans from Fannie Mae and Freddie Mac, and what they do is they service them for a small fee. Now they have all that owner's information, and they're able to try to resell it to them. Now, Quicken, like I said, I'm usually not too worried about their rates because they aren't the most competitive. So if anybody shops them, they have a good chance of beating them. So they have to figure out a way to be able to advertise to those clients. I think their profit margin is like 6% right now. And literally before they can even send out a loan estimate right now, they almost need a branch manager approval because they're higher than generally allowed. It makes me extremely nervous for their future. I think this is probably the tip of the spear, honestly. I can't see them doing any better in the future because they already own the lion's share of the market, and their profit margins are still extremely low. And right now they're completely overstaffed because they doubled up, tripled up during this time frame of extremely low rates, thinking they were going to last. Now, unfortunately, they didn't. So now we got extremely high rates, extremely overstaffed. It's kind of a bad setup for me. So for that reason, I'm kind of out. The only thing I would kind of watch here for is I would try to watch. Let me go back to my Webull. I would try to watch for. Holy cow! I gotta get my drawings in. I would watch for a breakout here somewhere. Like I said, this seems like a pretty strong support here at 25. So with the amount of short interest on this, if we can get it back up to 28, 30, you could see a squeeze back up to 43 and try to make a little bit of day trading money. I definitely wouldn't recommend this as a long-term hold. It's completely up to you. Please do your own due diligence. I am not a financial advisor, so do not do exactly what I say. Make your own choices, make your own decisions. But for me, it is not a buy right now unless I decide to buy to try to ride the squeeze. Other than that, long-term holds, I'm out. I'll wait and see further guidance if they decide they're going to do any dividends or anything like that. That's about it. Sorry the video might not have been the best. I appreciate your time and appreciate you tuning in. Please hit the like and subscribe button. I'd love to hear any feedback you guys got for me. If you want me to improve something, fix something, just let me know. I enjoy doing this. I'm not doing it for finances, so let me know. Appreciate it, guys.